Hey everybody, it's Norris from the Norris Group. It's Friday, March 17th. Happy St. Patty's Day. And how are you feeling about the economy right about now? That and much more as we cover the biggest headlines in real estate. Don't miss out on the radio show and podcast this week. We've got our second interview with Eric Hernandez. He is in the commercial real estate space. We talk about what high-tech innovation means for real estate, how technology will change education, which sector of real estate is the easiest to repurpose and reuse, and which ones are time-consuming and expensive, and marijuana real estate projects. That's all on the radio show and the podcast. The National Association of Home Builders reported builder confidence is at its highest in 12 years at 71. That is amazing. I remember when it was in the 50s. The California Association of Realtors released their latest home sales and price report for February, showing a 4.7% month-over-month decrease, but a 4.9% year-over-year increase for existing sales, and a 2.2% month-over-month decrease and 7.6% year-over-year increase for median price. Whew. Housing starts on single-family properties increased by 3% across the nation to their highest in 10 years. That's exciting news. And mortgage rates increased for the second week in a row, with the 30-year rates now at 4.3% and 15-year rates at 3.5%. FHA loans made up 22% of all loans originated in 2016, and you only need to have about a 3 to 5% down payment, and more of those are being originated by non-bank lenders that have less government regulation. You know, banks like Bank of America and Citibank, they all got burned and have all these rules and regulations, so they're doing less of those. Companies like Quicken Loans and Freedom Mortgage made up 93% of the loan volume last year for FHA. The average FICO score went from 693 in 2013 down to 678 in 2016, so banks are slowly getting a little looser with their guidelines, opening up credit. Some are starting to worry that these low-down loans are setting us up for tough times ahead, but I tried to get a loan on 2 of my rentals with an 800 credit score, actually close to 850, lots of money down. Just last year I talked to you about it. It was rough, so I don't buy that at all. Interested to see what you guys think. 10 years later, CoreLogic just released their review of the foreclosure crisis. So they looked back at the last 10 years. The peak foreclosure nationwide was in 2010 when 1.2 million properties were in foreclosure, and then 2009 had 1 million. So yikes, 2 rough years back to back. Florida won top honors for the most foreclosures. 12.5% of their inventory in 2011 was in some stage of the foreclosure process, and they are judicial states, so that of course took a really long time to work through. And Miami took the top city spot with the most foreclosures throughout the United States. Fannie Mae released their latest economic forecast, and consumer spending was weaker than expected. And of course, the Fed raised fund rates, but you know what? That hasn't changed the year-over-year expectation of a 2% GDP growth rate. However, our friend Doug Duncan says that the report remains somewhat conservative and in a holding pattern, waiting for more cues from the current administration on things like stimulus. But overall, consumers and industry pros and builders, of course, are giving the current market a huge thumbs up. But how are you feeling? It's only March. It's only been, a few months since Mr. Trump has been in office. How are you feeling? If you're on YouTube, please leave a comment below, and don't forget to like the video and subscribe to the channel so you don't miss a beat. If you're on Facebook, please don't forget to not only like the Norris Group page, but don't forget to add us to your See First list and with notifications on. Leave your comments below the video, and if we miss something, share the story on our comment sections on either YouTube or Facebook, and we'll make sure to include it on our blog at thenorrisgroup.com/blog. Hopefully we'll catch you around town at a few different speaking events. April 10th, we'll be doing 10 life-changing days of a real estate investor at LA South REIA out in the Bay Area. April 20th, 10 life-changing days in Pasadena, so 2 chances you'll catch us in LA. May 24th, AOA's $1 Million Trade Show and Landlording Conference. I believe it's free. Go to AOAUSA.com. Always a great event, and they have a great expo with vendors that you can check out. If you're doing rentals, you might not even know some of these vendors exist. Check it out. And then June 1st, we'll be doing the Southern California chapter of the Appraisal Institute's 20th Annual Inland Empire Market Trends. Whew! It's a full-day conference, and I believe it's open. You don't have to be an appraiser, but check their website. For more information on hard money loans, including fix and flip, buy and hold, and new construction, check out thenorrisgroup.com. Of course, we've got our 6.9% rental program and 8.9% flip, which is awesome. For more information about trust deed investing, check out tngtrustdeeds.com. And hey, did you miss our timing report? We just got the books back in. 2% interest rates, 40 trillion in debt, and other surprise endings. A report is now available. Check out thenorrisgroup.com/2, the number 2, 2%, all one word, and you'll find out more information on that. And if you buy the report in the next 30 days, you'll be able to join us for chapter 18. We covered so much information in one day. We left one chapter out, and we'll be doing it live and taking questions next month. If you order the report, you'll be part of that piece of the event. For more information, again, thenorrisgroup.com/2%. Have a fantastic weekend, and we'll see you next week.